Hi everyone. So back in 2018, there was a trade war between China and the US, and the US market corrected by roughly 22%. You can see this from this chart, and that correction lasted for roughly 11 bars, right? Which means 11 months. So because every bar here is, I'm looking at on the monthly candle. Now, why am I telling you this story? Because sitting in 2025, right? So here we are, the Nasdaq has corrected by roughly 8% from its peak. We are in the middle of a very intense trade war or a tariff war between US and multiple other countries. For example, recently US has slabbed tariff on Canada, Mexico, China, three of its biggest trading partners. And this is not slowing down. This is only escalating. Even US Fed or the US central bank is also anticipating that this trade war is going to, sort of might go haywire. It might impact the economy. So can the US stock market fall more? The short answer is yes. Is that a great buying opportunity? Again, it depends on your time frame. But for someone like me, I have been waiting for this type of a correction so that I can put big money. Okay. This is two. Number three, what is going to be the impact on India? Now, this really boils down to whether you're looking at an optimistic, pessimistic, or a baseline scenario of how this trade war is going to play out from this point. So on this video, I'm going to do two things. One is that I'm going to help you understand the economics behind this trade war, how it's going to transpire, right, and hit the stock market. And second, I'm going to talk about how much can the stock markets fall in India and the US. And accordingly, if you are building new position or if you want to put more money in India versus the US, so this 15-20 minute conversation is going to give you a lot of clarity around this topic. So let us begin. And first and foremost, let us understand that what exactly is it that the US is doing and what kind of impact or counter impact it can have on the world economy. Now, for that, you need to understand that who US trades with. So it's three of its biggest trading partners are Canada, Mexico, and China. And here they export less. The US exports less, but imports more, right? So for example, if you look at Mexico, the total export that it does to Mexico is $334 billion. But the amount of stuff that US is importing means bringing it into their country, they are bringing a lot more, right? So they are a net importer. Now this has significant repercussions because Trump had gone ahead and said that, you know what, the American citizens are being taken for a ride. And why? Because, for example, if China is exporting this pen to US and US is importing or bringing this pen into their country, China or Chinese exporters are paying very less tax. So what I'm going to do is that I'm going to impose more taxes on you guys and you have to pay more money to sell this product in the US. Now, for people who do not understand much economics, you would say that, okay, fine, maybe US is on the right track here. It helps their country. But is it? The answer is much more complicated. And the short answer is no. It doesn't really help because in the short term, this pushes the price of this pen or increases inflation. Now, US being a net importer, basically the inflation is likely to go up. This is not just my viewpoint. Even Musk, which is one of the biggest shipping companies in the world, a global player at scale, they are also anticipating the US inflation to go up. Now, is it good for the economy, bad for the economy? Well, this is not the only factor. There are multiple factors at play. So let me help you understand three different scenarios of this tariff/trade war. So let us first discuss the pessimistic scenario that if US goes full throttle on this trade war, then what is going to happen? So essentially three things are going to happen. The first and foremost, I already explained that inflation in the short term is going to go up in the US. Now this is a fairly big problem because the last 2-3 years in the US has been an inflation war, right? So the US government has been spending a lot of money, like that caused inflation. They printed a lot of money, threw it in the economy. So the cost of living has gone up in the US like crazy. Now the Fed has been dealing with inflation. Now because of this trade war, the inflation is likely to go haywire. Now if for some reason again we hit very high inflation, then it's a huge problem for the stock market. How much fall can we anticipate? Well, if I have to just pull out a random number, then I would say that it would at least fall to this 200-day moving average line. And here from this current level, you can at least anticipate another 10 to 12% fall. Okay. Now you will say that, okay, no, this is highly unlikely. Market falling by like 26, 27%. That seems unlikely. Even if you keep aside the COVID crash, right, from here to here, the market had fallen by roughly 20%. So, and this was due to inflation factor alone. So this 2021 to 2022 phase was an inflationary phase, right? And the Fed had to fight inflation and therefore the market came down by 20% in this zone. Now if this trade war escalates into inflation, there will be impact of trade war, there will be impact of inflation. Now, is there a cause to worry about? Well, the answer is no, because see, what happens is that the same factors do not hit the stock market twice. This phase that I was telling you, right, this phase, this inflationary phase where the market went down by 20%, it was due to inflationary concerns. Now, do we have inflationary concerns here? Yes, even if we assume that we have inflationary concerns, is it going to really hit the market hard? No, because the same factor is there. For example, COVID, multiple waves of COVID have come, but the primary COVID fall happened here, right? From this zone to this zone, right? So understanding the simple concept that the markets do not fall due to the same factor twice is a very important bit, okay? So this was the pessimistic scenario that inflation will go haywire, right? And anything can happen, but this is the maximum 25% fall that we are looking at, right? So from the current levels, we can expect another 12%, 13% fall on NASDAQ, okay? This is the maximum fall that I see for the reasons that I just helped you understand. Now comes a baseline scenario that, okay, what is a more likely scenario or a general scenario that could play out, okay? So the general scenario that could play out would comprise of three factors. One is that how would the US consumption play out in the next 6 to 12 months? Number two, how would the GDP progress? Now, inflation, I have already discussed that inflation, maximum fall that can come due to inflation is this much. That's what I'm anticipating. So let me talk about these 2 points, right? So the first key point is regarding consumption data in the US, right? A big part of US economy depends on consumption, that how up or down the consumption data is going, okay? So the general private consumption in the US is not going down. In fact, it hasn't gone down much, okay? There are going to be spikes, and you can see this, that the average trades around like, 0% growth rate because the US population is completely full. There is it's hard to grow consumption in the US. So it sticks around this level no matter what happens, okay? So I don't think that this is a major concern again. The concern or a realistic concern is around the GDP growth forecast. Now, what is likely to happen is that over the next 2 to 3 quarters, so let's say that the trade war takes another 6 months to solve, then for the next 2 to 3 quarters, we can see softening of GDP. Softening of GDP means that the GDP growth rate will slow down. Now, recently, US had posted good GDP growth rate, and therefore, we saw this entire rally, right from here to here, right? This was a good, very healthy rally of 75% on NASDAQ between 2022 all the way till 2024. Why? Because the economy or the GDP growth was supporting. Now, a more realistic scenario is that there is going to be a GDP slowdown. Now, in that circumstance, how much fall do we anticipate? Well, to be honest, in that scenario, we are likely to go into a sideways consolidation. So, sideways consolidation ka matlab hota hai ki something like this, right, might happen. That, okay, we might fall here, we might rise here, we might fall here, we might rise here, depending on how extreme this trade war is. That if it lasts for like 6 months, then there is likely going to be a quick resolution. We might fall something like this, that we will fall till here and then we will go up, right? Otherwise, if this takes time, right, 12 months, 18 months to solve, right, then it depends, right? So the answer that due to GDP concerns, how much would be the impact on the stock market? Well, it really depends, right? To what extent this trade war continues. Don't worry, I'll not confuse you. At the end of the video, I'll give you summary points, right? So if you are looking to invest money, or if you're looking to pull out money, invest more in India, you'll have a very clear thought process, right? And in case you want to learn things fundamentally, I also run a US stock investing based community where you can track whatever I'm buying and selling in the US market. So the notifications are given out very quickly. Entire rationale is explained. So if you're a serious investor, do consider joining that. Our community is already on a 5 to 6% alpha compared to the market. We started building this portfolio fairly recently and it is performing really well. So in case you are a serious investor, do check out my links. I combine fundamentals with technicals and then help you understand what kind of investing decisions you can make. So coming back, right? So I've discussed 2 scenarios. One was a pessimistic scenario where we are seeing or we are likely to see another 14% correction. Second is a baseline scenario. Here, it really depends to what extent this trade war escalates, right? I don't think it will escalate much. To be honest, I don't anticipate more than another 5-6% fall in a midterm if we are looking at like a 6-month resolution, because most of the impact or negative impact of trade war in the short to midterm has already been factored into the market, okay? Third point is an optimistic scenario. Now, what is an optimistic scenario? That Trump is making a lot of noise and he is threatening, countries and all that stuff. Those countries have also said, okay, boss, this person looks to be a little bit crazy. Let us retaliate. Now then Trump will come back again to the negotiation table. But if this entire situation or this entire drama, the way it is unfolding, if it gets wrapped up very quickly, that's the most optimistic scenario. Can this happen? I would say yes. There is a high possibility that this will happen. Why? Because Trump believes in theatrics. Okay, he will like do Zelensky interview in front of everyone, which was not really needed to be honest, but he's a showman, right? So at the end of the day, he's playing a dual role, president plus a businessman. Okay, so he would not want to hurt his own businesses. It does not make sense. There was no reason for him to launch like a meme coin or whatever. So he launched that coin and he made a lot of money in cryptos also. So he's a businessman at the end of the day. He's interested in protecting his wealth, and taking panga with so many other countries, it does not bode well for the entire business community in the US, right? So we need to work with the assumption that Trump is there to protect his own interest. So he would want a faster resolution. So this is an optimistic point. The second optimistic point is that the interest rates in the US are already very high. People are debating that, okay, the Feds are going to cut the interest rate, not cut the interest rate. No one is saying that Fed is going to raise the interest rate. And that is when the problem begins. For example, in this entire zone, right, this is where interest rates were jacked up, right? So interest rate went up and therefore the markets corrected quite a lot, okay? But now, yes, there might be delay in terms of cutting the interest rates, but the interest rates it's very, very unlikely that they are going to increase the interest rates. Now, that's the point that, because there is a little bit of firepower left in terms of cutting the interest rates and rallying the market. If we see like maybe another 5-7% correction in the market, right, or anything less than 15% total correction from the top, there is a good chance that interest rates will be cut, right? Again, if we find bad GDP numbers over the next 2-3 quarters, again, interest rates will be cut and the markets will go up. Okay, so that's how US market is likely to play according to my analysis. Next point comes that, okay, you are painting a positive picture about the US stocks. Why is that, right? See, it's very simple that at this stage in the world, if you have to pick the 3 fastest growth industries, which would be artificial intelligence, powered by semiconductors. So semiconductor becomes data centers, robotics, and generally tech. Now, which are the 2 strongest markets on this? Number 1, US by far. Number 2, China, right? So we can say that, okay, these 2 countries are competing with each other. The rest of the world is nowhere close. Now, from an investing lens, take a look at China market. This is a video that I had done 4.5 months ago. The China market is up 35%. At that point in time, no one was interested in China. Now everyone is interested in China. So China still remains a good bet. And same applies to the US, that, okay, fine, the market might correct by, let's say, even 20-25%, right? Yahan tak, right? It correct. But people here will buy in bulk. The reason being that they understand that on a 3 to 5 year basis, right now, one of the strongest market still remains US, because the top 3-4 triggers of growth in the world will come from the US still. Now, what about India markets? Should you invest in the Indian market or should you not invest in the Indian market? So let me again pull up Nifty chart, and here you can see that Nifty has corrected by how much in its recent drawdown, right? So it has corrected by almost 16-17%. So there is enough correction that has already happened compared to Nasdaq. Again, take a look at this chart. There it had corrected by roughly 7-8%, right? So usme itni girawat nahi hai, right? So in India, there is already panic. That's point 1. Point 2 is that India is a domestic consumption play now. For example, take a look at this chart. Here you can see that in this market fall, how much other sectors have corrected. Now, financials has corrected the least. So if, like me, you had invested in finance stocks, you would not be that scared, right? Now, of course, you can nitpick, Jeevan Finance fell by this much or IDFC fell by this much. But generally, like in that phase, you were also invested in like HDFC Bank, which has gone up by like 15-20%. Bajaj Finance has gone up by 20-21% when the market had fallen by 7-8%, right? So these kind of stocks have balanced the portfolio. What is the larger message that we are getting from India? That, hey, it's a domestic consumption play purely, right? There is no point in investing in speculation, right? Ki for example, defense बढ़ जाएगा, infrastructure में spending हो जाएगी. So in summary, I'll suggest you the following points. That number 1, US market looks really good from a long-term perspective. It makes sense to buy at every fall. So right now, if you look at the technicals, right? So this is Nasdaq, right? So there is a good 7-8% correction that has already happened. So the second support level for Nasdaq comes here, and where is it and how much would be the fall? So this is another 7-8%. This is the maximum fall that I see happening at least on a midterm basis, because even if we look at a negative scenario, the negative scenario plays out here, right? So which is your third support level, right? So to say, now this entire fall, if it happens from the top, how much will it be, right? So this will be a 27-28% fall. Now this is a fall that has not happened the last time. And this time the triggers for fall are inflation, trade war. These triggers have already played out in the past. So therefore adding positions at each of these falls makes a lot of sense, right? How exactly to do it? Again, I'll communicate on my US stock investing community. In case you guys are interested, check it out. Indian market is already discounted. I've pretty much maxed out my positions in the Indian stock market. But when it comes to the US, long-term, very good growth prospects. And in the short term, you need to be careful in terms of how exactly you are building positions. This is the trick in the US market right now, that you don't need to build everything in one go. You have to be sensible in terms of your position building. I hope you enjoyed this video. If you did, do subscribe to the channel and I'll see you soon.